Welcome to the Roy Morgan Weekly Update. We're now in mid-July and last week saw a third increase in interest rates from the Reserve Bank, increasing rates by 0.5% to 1.35%. And yesterday, Treasurer Jim Chalmers announced there'd be a special Jobs and Skills Summit to be held in September. Turning now then to the key weekly indicators. First, the latest Roy Morgan poll shows the ALP still well ahead on a two-party preferred basis. The ALP on 53.5 leads the coalition on 46.5%. But the key confidence indicators are slightly down. The latest government confidence rating is down 2 points to 109. This is still positive territory, well above the neutral level of 100. And the result is based on 45% of Australians now saying the country's going in the right direction. That's the same as it was last week. And only 36% who say it's going in the wrong direction. That's 2 percentage points up, 2% more people thinking the country's going in the wrong direction. And consumer confidence is down. The latest ANZ Roy Morgan consumer confidence rating is down 2.1 points to 81.6. Back to where the rating was in mid-June. The key driver of much of the current economic concerns, and certainly the Reserve Bank's decision to increase interest rates for 3 months in a row, is of course rising inflation. The latest weekly ANZ Roy Morgan inflation expectations increased 0.1 percentage points to 6%, the highest the indicator has been since late March. This question on inflation expectations asks Australians what level of inflation they expect over the next 2 years, and is a leading indicator with the most recent ABS inflation figures at 5.1% for the year to March 2022. The next ABS inflation figures will be for June, and they're due out in 2 weeks, and they're widely forecast to show official inflation increasing to around 6%, just as we thought. The Jobs and Growth Summit announced by Treasurer Jim Chalmers to take place in early September can only be really valuable if accurate data is used for the key indicators. Key measures like Roy Morgan unemployment and underemployment, mortgage stress, consumer confidence, business confidence, especially small business confidence, and inflation expectations. All these key indicators are related, and the danger is that these linkages are misunderstood and the wrong policies are adopted as a result of that sort of misunderstanding. Obviously, one of the key policy errors that must be avoided is allowing wage rises to take off without rises in productivity. Wage rises need to be directly related to productivity increases, otherwise it will only increase inflation. If wages are increased without productivity improvements, Australia's inflation rate will take off, and it'll lead to far higher interest rates than we have today, which will in turn lead to far bigger economic problems. The way for these policy errors to be avoided is to use the most accurate data, which Roy Morgan has and provides on key indicators like unemployment, underemployment, consumer confidence, which shows the impact of policies on the Australian economy on a weekly basis. The Reserve Bank's third consecutive interest rate increase now means interest rates have increased by 1.25% in only 3 months, the fastest increase for nearly 3 decades since late 1994. And once again, it's the mortgage holders who are feeling the pinch. Consumer confidence for mortgage holders is now at around 75, down over 25 points since the Reserve Bank commenced an interest rate increasing cycle. And this is Middle Australia. In contrast, consumer confidence for those who own their home outright and renters is about 10 points higher than for mortgage holders. Really, as long as consumer confidence holds up for both homeowners and renters, the Australian economy can continue to grow. But if consumer confidence for these groups plunges to the level of those paying off their homes well below 80, it will cause considerable concern for the economy. The Melbourne Institute and Roy Morgan have commenced a new partnership for taking the pulse of the nation. The partnership's intended to inform economic and social policy in Australia, and the first results have been released today, showing views on working from home, a hot topic as we all deal with the current waves of COVID-19 and the flu. The issue's a tough one for policymakers and for employers, as there are some workers who might benefit from working from home, while there are many others who don't. And clearly the type of job's crucial to the decision. And how does working from home impact on productivity? Well, the survey showed that 88% of respondents would like to work from home or have some kind of hybrid measure, some from home, some from the office. But only 49% of respondents believe that their employer would agree. So an interesting challenge there. A gender breakdown shows that women are more likely to want to spend more time working from home than men. And this isn't related to having children in the household. In fact, the gap, men and women, remains even once this is taken into account. So a very interesting challenge, this working from home. So in summary, inflation needs to be in balance with productivity, around about 3% generally. Our last inflation CPI from ABS was 5.1% for March. In June, we're expecting something that will be more like 6%. So we need productivity to be a lot higher than the current less than 2%. So if it's as simple as that, why do we need all these other consumer measures? Why do they matter? Well, if businesses are positive, they do more things, they create products, they invest in their businesses. If people are positive, they get out and they do things, they work, they create, they spend, they invest. If people are worried and pessimistic, they don't do any of these things. That's definitely not good for productivity. So this government doesn't have an easy job, but they have the support of the people, and that's absolutely critical. So I think that means that they're able to focus on the job of running the country and the job of improving productivity so that we can all enjoy real, deserved, and affordable wage growth. So subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you all for listening, and I look forward to joining you next week when we'll have the latest data on all of those critical measures: consumer confidence, inflation expectations, voting intentions. See you next week.